Okay, so I'll start with leases then. This is actually a long topic, leases. There are n number of things that you need to understand here, and at the same time, this is a bit important also because they frequently keep on asking questions on leases. Okay, now what exactly is leases and what is the importance of this? Let's try to understand this first of all. So if I talk about leases, then there are two possibilities about assets. By yesterday, we completed a valuation of all the assets. But now if I talk about acquiring a particular asset, then the problem with that is you need huge investments. You need to have a lot of money. Okay. So if you have money, you can invest in maybe property, plant, equipment, you can buy them. Okay. But think about others, means those who don't have that much money, that kind of money, or even about those persons who have money, but they're thinking smartly. They are not thinking about spending that money immediately or blocking that money in PP&E. Okay. What happens in PP&E is, right, if you buy it, you block a huge amount of money on the assets, the benefits of which you will be getting slowly. Okay. So instead of that, some people prefer going out for leases. So in lease transaction, you must have already heard about this. So lease is basically a contract between a person who is the owner of the asset and the person who wants to use the asset. So under a lease contract, what happens is not the title, but the right to use that asset is transferred to someone else. So here the owner of the asset is like the landlord, the supplier of the asset. He will be called as the lessor or lesser. Okay. There are two types of pronunciation. So whatever you call it, lesser or lessor, whatever you are comfortable with. Okay. And the tenant or the customer will be called as a lessee. Okay. Yes. So that's about a lease contract. So we are here concerned with what is the US GAAP requirement, what is the IFRS requirement relating to accounting of lease contracts, both in the books of lessor or in the books of lessee. Okay. So I hope all of you are okay with the meaning of the term lease. I don't think they will be asking us a question on lease meaning, but still you should at least remember that. Okay. So what you're doing here, you're not transferring any asset. You're just transferring the right to use the asset. Okay. So there should be an identified asset here. Okay. That's what is mentioned here. If you just look at it, and only the right to control the use is transferred to the lessee. Yes. Now, when we talk about lease, then for accounting purposes, we need to first understand that what kind of lease is it? So a lease can be an operating lease. A lease can be a financial lease. Okay, a finance lease, operating lease or finance lease. So you have to first of all understand that whether it is operating or finance lease, as the case may be, because accordingly our accounting will differ. Okay, but please understand one thing here. This is something important. You need to classify between operating and finance only in US GAAP, only as per US GAAP. Because under IFRS, there is nothing called as operating. Under IFRS, a single model is used. So all leases are treated as financial lease. Okay. So under IFRS, it's only financial. Under US GAAP only, you will classify it as operating and finance. You need to remember these points that wherever there is a difference between US GAAP and IFRS. So we have a separate topic about that, but still we have been discussing about all the topics, that what is the difference between US GAAP and IFRS. Okay, so you need to remember all these points because these are frequently asked. Okay, yes. Now, when we talk about the accounting from the point of view of lessor or from the point of view of lessee, okay, so we will understand that better with the help of a few examples. Means if we just look at the theory and all, then it will be a bit difficult to digest it. So what I will do is I will directly go and I will take the help of certain examples with the help of which we will understand it better. Okay. So first of all, like let's read it once. Okay. Because By reading, I don't think we will understand anything unless and until we do the calculations. We won't understand anything, but let's read it once, just plain reading. Okay, let us see what is written here. So lease payments, payments made by the lessee to the lessor relating to the use of the underlying asset. Here, note that for lessee, for both operating as well as financial lease, okay, lessee is required to recognize a lease liability at present value of the lease payments to be made. Now, that's something strange, but when we calculate, you will understand. Okay, so he has to recognize a lease liability on its balance sheet. However, lessee may elect not to recognize lease liability only for short-term leases. Whenever the lease term is less than 12 months, then in that case, no need to recognize a lease liability in the balance sheet. Okay, and for the lessor, for sales type and direct finance lease, so there are two different types of cases here. So for sales type and direct finance lease, lessor recognizes a lease receivable at present value of the lease payments to be received, okay, as part of the net investments in lease of its balance sheet. However, lessor does not recognize any net investment in lease for its operating leases. Okay, now obviously there will be a question in your coming in your mind that, so how to identify whether it's an operating lease or whether it's a finance lease? You need to understand that first. Okay, so there are a few points with the help of which we will classify that, and at the same time it's quite important because not necessarily in the question it will be given that it's operating or finance lease. So you have to identify sometimes. Okay, and similarly, according to different requirements, the accounting treatment also differs. So we will understand that with the help of some examples. So there are basically a few points that you need to remember. We will be discussing that in some time. Okay, so with the help of that, you will recognize whether it's operating lease or finance lease. If it is given in the question, well and good, very good. But if it's not given, then in that case, you need to identify. Okay, now, before I go further, I'll just ask you one thing. Think about it. Like, say, for example, if you buy a two-wheeler, or if you buy a four-wheeler, or if you buy a house or anything like that, any asset, okay, you like maybe you buy it for cash. If you buy it for cash, that's well and good. Okay, not a big deal. But don't you think that this we often buy these things on installments? Not just these three assets. There are other assets also where we get these assets on installment basis, right? What happens there? If you try to understand here, what happens is you make the payments, you make monthly payments maybe, which is called as EMI. And this EMI includes some principal portion and also some interest portion. Okay. Now, at the end of the tenure, whatever is a term, at the end of the term, what happens is when you pay off all the installments, you get the ownership of the asset, right? So legally speaking, the ownership of the asset is not transferred to you unless and until you paid the last installment. Correct? Acha. Besides that, just think about it. Even this kind of transactions are there wherein maybe you take a four-wheeler or a two-wheeler, say, for example, you went to any tourist destination, okay, any place. And say you went to Goa, okay? Let's take an example. You went to Goa. Okay, and you must have seen that in these places, it's quite common to lease out some two-wheelers or four-wheelers for a day, 2 days, 2 days, a month or something like that. They often let it out, right? So when you take these things, you pay rent, right? Now, do you think that after the end of the term, whatever is the term, you get the ownership of the asset? No. Here, your intention is pure use. Getting me? Now, in both the cases, you're paying something maybe on monthly basis. Okay. In both the cases, just think about it. Like, say, for example, you take a house on rent. This also happens. You take a house on rent, right? And you're paying some rental. So after 10 years, 12 years, 13 years, as the case maybe after the end of the term, do you get the ownership of the house if you take it on rent? So that's the question basically. So hence there are some differences, and this different transaction itself is classified as finance lease and operating lease. Okay. In the prior example that I gave, it will be a finance lease. And the second example that I gave will be an operating lease. Okay. Yes. Acha, tell me one thing. How many of you know about time value of money? You will learn about it in part 2. But yes, the application of it is covered here. So I'll just give you a brief idea about it. We cannot discuss that in detail anyways. We don't have that much time. Okay. Because that discussion is a separate discussion that will take a lot of time. So money has a time value. With time, the value of money changes. So if suppose I just compare $100 as on today and $100 1 year later. So if I pay you say $100 today and you have an opportunity to invest it somewhere for 10%, suppose. So that $100 becomes 110 after a year at rate 10%. So that $100 is worth 110 in future. And that $110 of future is worth $100 today. So if I talk about $100, 110 is the future value of it. And if I talk about $110, $100 is the present value of it. Right? Yes. So the present value is always less than the future value, and the future value is always more than the present value. Okay. So whenever we look at some payments or some receipts that we are supposed to get in the future, and we have to take the decision at present, then what you should do is the future money, the future values, the future dollars that you will receive or pay as the case may be, you should convert that into its present value. Okay. And similarly, if you want to think about, if you want to compare in the future, then if you just have the present value of it, then you need to calculate a future value of it. So there are different ways of it. Basically, to convert a future value into present value, we use discount factors. Okay. And the summation of this discount factors is called as annuity factor. Okay. So that's what will be used here. We'll be using it. So let's come back to it later. First, let's continue here. Now, lease payments, as I said just now, that lease payment includes, okay? So includes in substance fixed payments, okay? So payment that appear variable, but are in effect avoidable. Example, payment that do not create genuinely variability, such as those that result from clauses that do not have economic substance. And the lower of the payment to be made when a lessee has a choice about which set of payment it makes, although it must make at least one set of payments. And deduct any lease incentives, which includes payment made by the lessor to or on behalf of the lessee, and loss incurred by the lessor in assuming lessee's pre-existence lease with a third party. Now, include variable lease payments that depends on an index or rate. Example, consumer price index or market interest rate, initially measured using the index or the rate of commencement date. Now, these things appear to be a bit of like alien language or what. We don't understand anything here unless and until we look at some examples. Okay, so let's look at this example now. Lease requires $10,000 lease payment per year for 3 years. That will increase each year based on CPI, consumer price index. The lease liability is calculated based on 10,000 cash lease payments for each of the 3 years. 10,000 is given in the very first line, right? Irrespective of the expectation of changes in CPI. Thereafter, say in year 2, if CPI increases by 4%, okay, then the actual lease payment will be $10,400. 10,000 plus 4%, 10,400, of which 10,000 will be treated as fixed lease payment used to calculate the lease liability. Okay. And $400 will be the variable lease payment. Okay. Both are lease payment. One is to be treated as fixed. One is to be treated as variable. Quite obviously, the one that might change is variable. The one that is constant is fixed. Right? Quite simple. However, as per IFRS, whenever lease payments change due to change in an index or rate, the lessee needs to remeasure the lease liability based on its new payment amount at 10,400. So this kind of classification is not there in IFRS. Okay. Then optional payments, if any. Okay. So there is like optional buyout expected to be exercised by the lessee. Means if he wants, he can pay a certain sum of money and he can buy it out. Okay. He's using it. We have allowed the use of the asset and we have given him an option that if you wish, after these many number of years, pay us some amount and take the ownership of it. Okay, so this is called as optional buyout. So payments to be made in optional periods only if the lessee is reasonably certain to exercise the option. Okay, to extend or not to terminate the lease. Okay, so this kind of sentence will be given to us in the question. Unless and until it is given, don't assume. Okay, optional payments to purchase the underlying asset only if the lessee is reasonably certain to exercise that purchase option. Okay, sometimes even this happens that the lessee gives a residual value guarantee. Now all of us understand about residual value, I hope. Okay, the value that you can get at the end of the life or at the end of the term duration of the lease. So what value remains for of that asset? So that is called as a residual value. Okay. Yes. So for lessees, amount that is probable will be owed under residual value guarantee. Sometimes this happens that in the agreement, in the contract, we already guarantee a residual value. Okay. And for lessors, amounts at which residual assets are guaranteed by the lessee. So that's basically a residual value that the lessee guarantees. Means that's basically if the lessee is using it, then depending upon the use, it might vary. So he will guarantee that, okay, whatever happens after at the end of the term, this will be the residual value of the asset for sure. Okay, so he becomes, if he guarantees, of course, he becomes, that's kind of obligation for him. So we, that needs to be recorded in our accounting records. Now, lease payment do not include variable lease payment other than those included above, the one that we just discussed. Okay, just look at this example. If lessee is required to make variable lease payments each year of the lease at rate 2% of the lessee's sales generated from the leased building, this variable payment, which is linked to performance and not based on index rate, will not be included in the measurement of the lease liability. We won't take that in lease liability. I just told you earlier that we need to maintain a lease liability. So in that lease liability calculation, which you have to identify at the beginning, okay, we will not consider these things. Okay, what kind of thing? Here, as you can see, 2% of the lessee sale will be the lease rent. So we cannot guarantee that. So we cannot measure that with certainty. So this is not included in lease liability. Okay. So any guarantee by the lessee of the lessor's debt, anything that we cannot measure with certainty will not be included. Okay. And amounts allocated to non-lease components of the lease contract, these are not to be included. Okay. Yes. I just told you that some present values and future values calculations, the time value of many calculations will be involved here. So for that, we need a discount rate. So the discount rate for the lease used by the lessee to calculate to calculate and amortize the lease liability. Okay. Now, unless and until we pass the journal entries, we won't understand that what is the difference between amortizing and recognition of the lease liability. Okay. You won't understand that. So let's quickly go to the example. With the help of that, we'll understand it. Okay. This is what you need to remember. Huh? Just look at it. These are the things that you should know. Okay. Yes. Now, let's go ahead. Now, let me start with how to recognize whether it's an operating lease or whether it's a finance lease. Now here, basically, first you will find the explanation on the operating lease, but let's first understand that theory of how to differentiate whether it's an operating lease or whether it's a finance lease. Okay, so I will jump over to this page. Okay, so here the explanation of finance lease is given. Okay, so just understand that how to identify. Means normally speaking, a lease will be taken as operating lease. Normally speaking, we are applying US GAAP. As far as IFRS, everything will be finance lease. Okay. So as per US GAAP, there are 5 different points that we need to remember. Okay. And if any of these 5 points, any of the one criteria, I will say, is met, then the lease will be considered as a finance lease. If none of these criteria are fulfilled, then we will treat it as an operating lease. Okay. So please understand that even if just one criteria is met, then we will consider that as a finance lease. So what are these 5 criteria? So there is a mnemonic that has been developed here. That's owner, OWNER. Let's understand one by one. So number 1, what is that? Ownership transfer. Ownership transfer. I just gave you an example that when you buy a 2-wheeler or 4-wheeler on installments, or your house on installment, what happens? When you pay all the installments, automatically the ownership gets transferred to you. Can I say so? So whenever the ownership or the title gets transferred to the lessee at the end of the lease term, then the lease will be definitely treated as a finance lease. It will not be taken as an operating lease. Okay, so you got the O of owner. Okay, next is W. W is written purchase option. So it is written in the contract that if the lessee desires, if he wishes, then at the end of the term, he can buy this product, this asset, whatever asset we are talking about. So that asset lessee can buy. So this is basically called as a bargain purchase option. Okay, so that's what it is. Number 3, N, OWN. N stands for no alternative use. What do you mean by that? The lessor made the asset in such a manner that only lessee will be able to use it now. There is no alternative use. Lessor has no use of it now. So even after the term, end of the term, the lessor won't be able to use it in any other manner. It's exclusively made only for the lessee. If that is the case, then by looking at the facts only, we can understand that it's only for the lessee. So when in such case, we will treat it as a finance lease. Okay. So OWN. Next is E. E means equal or excess present value. Okay. So look at the bullet there. So reasonable approach to access this criteria is if the present value is equal to 90% or more of the future, of the fair value, sorry, future, not future value, of the fair value, whatever is the fair value. If the present value that we will calculate, we'll learn how to calculate that. If that is more than 90%, then again, we will treat it as a finance lease. Now, this is something that you will understand only with calculation. Just remember the terms, means percentage. If the present value is 90% or more, just remember this. You'll understand that better when we will actually calculate it. Okay. And last point is something simple. If the lease term, whatever lease term we are talking about, if that exceeds means a major portion of the life of the asset. Okay. So whatever is the life of the asset, more than a major portion of it, for that duration, it was held by the lessee under the lease contract, then also we will treat it as a finance lease. Now, it's not clearly known that when you will identify, when you will say that a major period has been, for a major period, it was held by the lessee, how to identify it? It's not clearly given, but still, just like a thumb rule, you can understand, like if suppose the lease term covers 75% or more of the remaining economic life. Like say, for example, if I say that the life is 10 years, and this is held, the whatever is the asset we are talking about at a time when you're giving it on lease, whenever the contract is signed. So at that time, what is the life of the asset? We will look at it. So suppose the life is 10 years and you are entering into a contract with someone for 8 years. 8 years. So 8 out of 10, 80% of the term, it will be with the lessee. That's a finance lease. But suppose if you are entering into a contract for say 5 years, 4 years, 5 years, 4 years is less than 75%. So as a result, 5 out of 10 is 50%. 4 out of 10 is 40%, less than 75%. So in that case, what we'll say, it's a operating lease. Though you should not remember that it's exact 75% or more. There are other ways also of looking at it, but that can be taken as one of the thumb rules from our exam point of view. Okay. So these are the 5 points. If any of these 5 points are met, any one, even if one of these 5 criteria are fulfilled, then we will say that a lease is a finance lease. And if none of these criteria are fulfilled, then only we will say that a lease is an operating lease. Okay. Yes. So let's move on to the accounting part. Okay, the calculations, and we'll understand that with the help of an example. Okay, so I'll come back. So let's look at the accounting for lessee as well as the lessor for if the lease is an operating lease. One by one, we'll look at both. So first of all, let's start with operating lease. Okay. So whenever there is an operating lease, then accounting by the lessee, we are looking at the lessee's books first. Okay. So at commencement date, capitalize as right of use asset. In future, we'll call it as ROU. Okay. Right of use asset on balance sheet. So we will recognize an asset, but that will be specifically mentioned, right of use asset. Okay. Fine. And we will immediately also recognize a corresponding lease liability. Okay. So basically this will appear, the right of use asset as asset on the asset side, this will appear, and lease liability will appear on the liability side now. Okay. So after that, lease liability will be lease liability. We are talking about lease liability. We were looking at the theory about lease liability by now. Now, what is it? It will be is the present value of the lease payments not yet paid. Okay, as of the commencement date, and excludes any executory cost for R&M and insurance or tax paid by lessee. Okay, in case of sometimes this happens that whenever you buy an asset, then you do pay for taxes and insurance and similar kind of things. So we have to exclude these. Okay, pure lease payment. Consider only the pure lease payments. Now, right of use asset will be equal to the lease liability as of the commencement date initially. Okay. Now, plus any lease payment made to the lessor at or before the commencement date, minus any lease incentives received from the lessor, and any initial direct cost incurred by the lessor that will be amortized over lease term. Now, just reading it. Okay. After the commencement date, what you will do is you will debit the lease liability. You will credit the cash as you pay. We are talking about the lessee's book. So lessee is paying. So when he pays, he will not debit an expense. He will debit lease liability and he will credit cash. Okay. Now, this is for the payment. This is for the payment. Okay. Now, what will happen as far as your income statement is concerned? For that, at the end, we will pass another journal entry wherein lease expense will be debited, which will go to your income statement. Since you're treating it as operating expense, okay, operating lease, sorry, okay, you will credit the lease liability by the amount of the interest on it. Now, how to calculate the interest, we'll learn about it. Okay, and the balance, whatever is left, like from the installment, you deduct the interest. So the balance will be the principal portion. That is for the asset. So that will be credited to the lease right of use asset that you have debited earlier. You will be crediting it now. That will be the plug, the balancing figure. Okay. So this is how we will go ahead. Now, you need to remember a few things. Number one, use straight line basis unless another systematic and rational better represents the pattern in which the lessee expects to consume the right of use asset future economic benefits. So if nothing is given, nothing specifically is mentioned in the question, then we will always use the straight line better basis. Okay. Now in finance lease, please note there, in finance lease, lessee recognizes interest expense on income statement as the lease liability is paid and amortizes the lease asset. Okay. Now we'll understand that when we'll come to finance lease. Okay. Yes. So let's understand with the help of example. You won't understand anything unless and until we look at this. Let's see this. What do you see here? On 1/1, whatever is the date, lessee company leases from lessor company equipment for 3 years at 25,000 payable at the end of each year. Tell me one thing, is it necessary that the lease payments will be equal every year, or it can change also? Can I say sometimes it depends, it can even change, right? So we will be looking at both. Here we are looking at equal payments, okay, which normally speaking happens. The asset life is 10 years. Acha, just observe, asset life is 10 years and the lease has been given for 3 years. So that's 30% of the total life, not exceeding 75%, right? Similarly, nothing like a buying out option has been given to us here, okay? And at the same time, the rate of implicit in the lease is 10%. The lease is an operating lease. It's clearly mentioned here that this lease is an operating lease, okay? So that's it. So we know that this is an operating lease, so we will be passing the journal entries accordingly, right? Now, this kind of informations, the time value informations, time value of money informations will be provided to us in the question. But please note one thing, that even if these informations are not given, the time value of money informations are not given, still, whatever question you are looking at, on the top corner of it, you will find a section wherein you can refer to the time value of money tables. Okay, so the present value tables, future value tables, you can annuity value tables, you can refer to those tables. Okay, so that's obviously provided to you in the computer itself, but you won't, I guess, need it, because what, as far as I've seen in the question, only they give us the present value and annuity value informations. Okay, like it's given here, present value information. So present value of ordinary annuity for 3 years at the rate 10% is 2.48685. Okay, I'll just tell you that if suppose this is not given, then remember one thing, that annuity, okay, present value of annuity is basically the summation of discount factors. Now, I'll just tell you how to calculate the discount factors with the help of which you can get the annuity factors. See, look at the rate first of all. So if you see the rate given here, it's 10%, correct? So you should know the rate, 10%. Okay. Now, when you want to calculate the discount factor for year 1, year 2, and year 3, okay, to discount factors, I'll just tell you the trick first of all. Okay, it's the formula is something like this: 1 divided by 1 plus r to the power n. Okay, the formula is something like this, where r is the rate, n is the duration, time. Okay, so what you will do is, r is 10%, you can call it as 0.1. Okay, so in your calculator, 1 divided by 1.1. Okay, this will be the discount factor of year 1. Okay, now without pressing anything, if you press equal to, you will get the discount factor of year 2. And without pressing anything, if you press equal to, you will get the discount factor of year 3. Just do it in your calculator. 1 divided by 1.1 equal to, you get 0.909. Okay. Then without pressing anything, if you press equal to, you get 0.826. Without pressing anything, if you press equal to, you get 0.751. Okay. And the summation of this is the annuity factor, annuity. So if you take the total of it, 0.909 plus 0.826 plus 0.751, what do you get? You get 2.486. Okay. Just observe here. This was the annuity that was given to you here, 2.486. Okay. So even if it is not given to us, we can quickly calculate the annuity. How can we calculate quickly? Just observe what I'm doing it again. 1 divided by 1.1 equal to memory plus, equal to memory plus, equal to memory plus. That's it. When I recall the memory, I get the annuity factor in the memory. So let's go ahead. So this is 2.4865, 48685, sorry. Okay. Now, so what you will do first of all, the lease payment, just look at the lease payment. Okay. Lease payment is 25,000 per annum. 25,000 per annum. Okay. So first of all, what you will do is you will calculate the present value of the lease payments. How will you do that? 25,000 into 2.48685. Okay. Now 25,000 is the constant. You need to multiply that with the annuity factor. Okay. So this is the present value that you will get. So the constant payment multiplied by the annuity factor, you get the present value of the lease payments. Okay. See, you will be paying 25,000 in year 1, 25,000 in year 2, 25,000 in year 3. So can I say that we will be making a payment of 75,000? No. Yes, as well as no. Yes, because yes, if we look at the simple thing, then yes, 75,000 is the payment that we'll make for 3 months. 3 years. But if we apply time value of money, no, we are going to make these payments in future. Okay. So if I talk about the future, 25,000 will be paid after 1 year. So I need to calculate the present value of it. So how to calculate a present value? This is the payment. You multiply that with the discount factor. So 0.909 is the discount factor, right? 0.826 is the discount factor for second year. 0.751 is the discount factor for the third year. Okay. So if I want the present value of all these installments, then can I say I want the total of these 3? Okay. Now I won't multiply that, but I will just apply a mathematical shortcut. What is that? I want this total and the total of this. Correct. So basically this is nothing but the product of these 3. Okay. So do you find something common here? Can I say 25,000 is common? So can you see here AX or wait, can you see here something like AX plus BX plus CX? Okay. So X common, A plus B plus C. We used to do that, right? So the same thing you are going to do here. X common, that is 25,000 common, multiplied by A plus B plus C. What is A plus B plus C? 0.909 plus 0.826 plus 0.751. I think this total only is 2.486. That's what is the annuity factor. So what is the formula? 25,000 multiplied by the annuity factor. Okay. That's what you're doing here. So this is what? This is the present value of the lease payments that you're gonna make in future. Okay. Chalo. Anyways, I should continue. Okay. So that's the present value that we calculated. So this is the amount with which we will recognize our lease liability. So see, what is the first journal entry that we are passing? We are debiting lease right of use asset account and we are crediting lease liability. By how much? This is the amount, 62,171. Okay. The present value of all the lease payments. Okay. Done with this? Yes. After this, there's a very important calculation table here. Okay. Now we need to understand. And for this, I don't know how many of you are sitting with a calculator right now, but if you immediately calculate as I say, you will understand that immediately. Okay. And if you just listen without calculating anything, I don't think you will understand anything here. Okay. So it is better that you take the calculator and calculate accordingly. Right? So Let's look at it. Day one, I'm recognizing in my balance sheet asset as well as liability. Correct? The asset as well as liability. So day one, we recognize the asset as well as liability. Okay. Now we know that every year we are making a payment of 25,000, right? So whatever is the payment made, 25,000, we will reduce the lease liability by that much, 25,000. Okay. You'll understand in some time. Okay. So just observe here, my journal entry every year end will be lease liability account debit to cash, lease liability account debit to cash, lease liability debit to cash. That's a constant journal entry that you will pass every year. Okay. You're making lease payments. So that lease payments outflow. So cash account will be credited and you will debit lease liability. Okay. Now, quite obviously, you will think that, sir, lease liability account earlier, the first journal entry that we have passed here, that was by 62,171. And we are debiting 25, 25, 25, 75,000 now. What about the difference? Now that difference is exactly the amount of the interest. You'll come to know about that with the help of the calculation. That interest will automatically get adjusted in lease liability. And how to adjust that? That's what we are looking at now. Okay. Now, look at this. This is the total amount of lease expense, 25,000 that you're making, the payment that you're making. Now, this comprises of interest as well as principal. Now, to calculate interest, we will consider the rate of interest of 10%. And we will calculate 10% on the opening balance. Okay, we'll calculate 10% on the opening balance. So look at the opening balance. Can I say the opening balance is 62,171? Correct? So calculate 10% of 62,171. Are you getting 6217.1? Okay. So that's the interest element included in 25,000. So the balance will be the principal element. Okay. So what is the balance? Out of 25,000, deduct 6217. This is the balance, 18,783. Okay. You need to make this calculation. Then you have to pass the journal entry. What is the journal entry? Just look at it now. At the year end, after passing this entry, okay, for the payment, we will pass a journal entry for lease expense. What will be that? Lease expense account will be debited to 25,000, which will go to your income statement. Okay. Lease expense account will be debited. Lease liability will be credited by the amount of the interest. Are you getting this? We are crediting it by the amount of the interest. Just observe one thing. The lease liability account carried a credit balance of 62,171. Okay. When you further credit it by any amount, its credit balance will increase. So by crediting it, you are increasing your lease liability. Okay. So lease expense will be debited by 25,000. For 6217, we will credit lease liability, the interest portion. And the balance that you got, 18,783, that will be credited to the asset that you have recognized. The one that you debited here, you will be crediting it here. 18,783. This is basically the principal portion. Okay. I hope you are understanding this. Okay. So this is what you did for the first year. Second year, again, you are making a payment of 25,000. So when you make the payment, again, entry, lease liability account debit to cash entry. Okay. Then you will make the calculation. Okay. This 25,000 includes how much of interest and how much of principal. So you will first calculate interest and balance is the principal portion. Okay. In any case of lease or loan transaction, this kind of calculations only are made. So this time again, you will calculate 10% of the opening balance. So what is the opening balance? 43,388, right? So calculate 10% of that. Acha, how did you calculate 43,388? Please try to understand even that. From 62,171, just do in your calculator, from 62,171, deduct 25,000. Are you getting 43,388? Just tell me. No, no, you're not getting 43,388. So this means that from 62,171, we are not deducting 25,000. So try to understand, we don't deduct the interest portion, we deduct only the principal portion. Okay. So you will deduct from 62,171 only the principal portion, which is 18,783. Do it again. From 62,171, deduct 18,783. Okay. Yes. So you got it. Now you're getting 43,388. Okay. So 43,388 is the opening balance. You will calculate 10% of that, which comes to 4,338.8. Rounded off, it is 4,339. So this 25,000 includes 4,339 of interest. So the principal portion has to be 20,661. Okay. Again, from 43,388, deduct 20,661. Balance is 22,727. Now you pass the entry for payment. At a year end, you will pass the entry for expense. So lease expense account will be debited by 25,000. The amount of interest will be credited to lease liability. So that amount 4,339 goes to lease liability account, and your lease asset, right of use asset, will be credited by the principal portion, 20,661. Getting me? Third year, again, you're making a payment of 25,000. So 25,000 lease liability account debit to cash. Again, when you calculate the interest out of this 25,000, how much is the interest? So you will calculate 10% of the opening balance. Opening balance is 22,727. If you calculate 10% of that, that's 2272.7. Rounded off to 2273, right? So this 25,000 includes interest element of 2273. So the balance is the principal portion. So when you adjust this principal portion from the balance, the final balance is 0. Correct? So again, you will pass the entry for the expense. What is that? Lease expense account debit. Interest portion will be credited to lease liability account, and lease asset, right of use asset account will be credited by the principal portion. Let's understand this better with the help of an account, with the help of which you will understand that better. Okay. I'm making here two accounts. Okay. Just observe. This is the right of use asset and lease liability. Lease asset, lease liability. Okay. The first entry that you pass for 62,171 debited here, and 62,171 credited here. Correct? After that, what you did, just try to understand. So first of all, lease liability debit by 25,000. Okay. Lease liability debit by 25,000. So in a way, you're writing it off. Okay. You're writing it off. But you're also crediting lease liability by 6217. You're crediting this by 6217. Okay. Acha. And besides that, if you look at it carefully, then you're also crediting asset by 18,783. You're crediting asset by 18,783. Correct? So you're doing that for different years, but I won't write that for different years. I will directly write that for all the years taken together. So if I look at the liability, lease liability, can I say every year it was divided by 25, 25, 25? I'll write that here. 25, 25, 25. Correct? And every year we credited the interest portion to the lease liability. So first year 6217, second year 4339, 4339, and third year 2273, 2273. This is what we credited here. Correct? Okay. Besides, how much was credited to asset? 18,783 in the first year, 20,661 in the second year, and 22,727 in the third year, right? This is what we did. Okay. Look at both these accounts carefully now. Just observe it. What do you observe? You understand what you're doing here. You first created asset and liability, and it ultimately gets closed at the end of the term. Getting me? So that's the point. Okay. That's the trick of operating lease. This is how we are treating it. Right? Chalo. So that was the first case. Now we will come back to another case where we are making different payments. Okay. Means the lease payment are not constant. In that case, what will happen? We have to apply SLM though. Now, we'll look at another example. But in this example, what's happening is you will find that the amount payable, the lease payment that is payable every year, that's differing. That's not the same. Okay. But still, we need to apply the straight line method. So let's look at it now. On so-and-so date, lessee company leases from lessor company equipment for 3 years, same duration. But at the rate 20,000 payable at the end of year 1, 25,000 payable at the end of year 2, and 30,000 payable at the end of year 3. Okay. Now the difference that will make here is like if the payments are different, then in that case, we cannot consider the annuity factor. Okay. Annuity factor can be considered only when the same amount of payment is to be made every year. But here, since the amount of payment differ, hence we need to calculate them separately to get a present value. Okay. Rest, when you recognize it in your, when you pass the journal entry, we will be basically applying the SLM. Okay. So we'll come to that. First of all, let's look at it. So 20,000 in year 1, 25,000 in year 2, and 30,000 in year 3. Okay. So the asset life is 10 years. The rate implicit is 10%, though the lease is an operating lease, recorded journal entries. Okay. Let's go for it. Now, present value factor. Look at it. They didn't give you the annuity factor. They gave you the present value factors for all the years. So for year 1 at rate 10%, I think we already calculated this earlier. So 0.90909 for year 2, it's 0.82645 for year 3, it's 0.75131. So we already calculated that. We know how to calculate this. Okay. So in this case, since the amount, each year's amount is differing, so we need to calculate separately, right? When you calculate the total present value, you need to calculate them separately. So just look at it for year 1. Look at the first bracket there. For year 1, I'm here. Okay. Year 1, 20,000 into 0.90909. Year 2, 25,000 into 0.82645. And year 3, 30,000 into 0.75131. If you remember, we did the same in the previous question also, but the point was since 25,000 was common, constant there. So we took that 25,000 out and we simply multiplied that with the summation of 0.90909 plus 0.82645 plus 0.75131. And that's what was the annuity factor. Okay. In this case, we won't be able to do that because the amount is not constant. So we need to multiply them separately and take the summation of it. So when you multiply that, you get the summation as 61,382. Right? So first entry, again, entries will be the same. The only thing is amount is changing. Okay. So the first entry will be same. Lease asset debit, lease liability credit. Simple. Okay. Well, while reading it, you can look at it like that. To remember, it's okay. But when you write, when you see in your examination, please note, lease right of use asset. That's the name. Okay. But yes, in short, just to remember, we can say lease asset account debit to lease liability. Okay. Now, here, asset debited by 61,382, liability debited, credited by 61,382. Again, the same thing we are doing. Point is that every year we are making a different payment, a separate payment, right? So when you make the payment, you pass the same journal entry. So lease liability account debit to cash. But this time the amount is different. So please pay attention there. Okay. So the first entry will be by 20,000 for first year, 20,000 lease liability account debit to cash, 20,000. Okay. But Point to be noted is when you debit the income statement, when you show it on income statement, in income statement, you will apply SLM. You will apply SLM. So for SLM, just take the total of all the lease payments. Total of all the lease payments is 20,000 plus 25,000 plus 30,000. What is the total? 75,000. Correct? SLM means we will divide it equally. So divided by 3. So in income statement, even if you are making different payments, you will recognize 25K SLM. Okay. So in income statement, see here, I'm debiting lease expenses by how much? 25,000. Okay. So in income statement, you're taking 25,000. Of this 25,000, some portion is interest, some portion is the principal. So again, you will do the same calculation. Please take your calculator. First year's opening balance is 61,382. Calculate 10%. That is 6138. First time when you made that calculation, it obviously will take time, but now since you're doing it again, I guess you will be able to do it fast. Right? 6138. So 25,000 includes 6138 of interest. So the principal portion has to be 18,862. Please note, this is not of the amount that you have paid. This is the SLM amount. So this lease expense will be debited by 25,000. It will be credited to lease liability by the amount of interest, and it will be credited to asset by the amount of the principal portion that is left. So from the total lease expense, you're deducting the interest portion, balance amount will be credited to the asset, 18,862. You'll do the same process now. Now, 61,382, okay, minus 18,862. 61,382 minus 18,862. How much do you get? Yes, 42,520. That's the balance, opening balance of asset and liability both. Okay. Now, 42,520. Again, in the second year, you're now making a payment of 25,000. So lease liability will be debited by that much, and cash will be credited by that much. But income statement, your lease expense will be debited by constant 25,000. SLM, you're applying SLM. So constant 25,000. Okay. You will credit interest by the whatever is the interest portion. Interest portion will be calculated as 10% of the opening balance. So 42,520, that was the opening balance. Calculate 10% of it. I guess there's a printing mistake there, no? That's 47,520 if I'm not wrong. Oh, yeah, correct. Just observe the actual amount of lease was 20,000. Correct? Actual amount of lease was 20,000. Correct? Deduct 6138 from it. Though we credited asset by this much, that's fine. But you credited your lease, rather you debited your lease by 20,000. Huh? Please observe. You didn't debit your lease by 25,000. Okay? Please note there. So as a result, your lease liability balance will be something different. Okay? Now from this 20,000, deduct 6138, you get 13,862. Right? So that is the practically principal portion. Now 13,862 deducted from 61,382, 61,382 minus 18,862. You get 47,520. You have to calculate interest on the opening balance of lease liability. Okay. Now, if you understand lease liability, just try to make the accounts. You'll understand that better. Lease asset. Lease liability. Okay. Pass the journal entry. First entry, post the journal entry rather. First entry is of 61,382. Debit asset. Credit liability. Okay. Then first year end, What is the journal entry that you passed? You debited lease liability by 20,000. Lease liability debit by 20,000. Correct? To cash. You don't debit by 25,000. Huh? But for lease expense, you debited lease expense by 25,000. You credited lease liability by 6,138. Lease liability credit by 6,138. 10% of the opening balance. It matches. Okay? 10% of the opening balance. And you credited lease asset by 18,862. You credited lease asset by 18,862. Tell me what is the balance for the first year? Balance carried down for asset. Correct? Now this balance will be brought down here. Balance brought down 42,520. Correct? Similarly, calculate the closing balance of lease liability. It's 47,520. Correct? So next year, when you bring down the balance, it will be 47,520. Right? So in the second year, when you calculate interest, that interest will be 10% of 47,520. How much that will be? Getting me? That's what is written here. Your asset account carries a balance of 42,520 in year one, but liability carries a balance of 47,520 after the end of the year one. Okay? That's the opening balance of year two. Okay? So in year two, you make a payment of 25,000. So lease liability will be debited and cash account will be credited by 25,000. You're making a payment, actual payment of 25,000. So to cash, 25,000. Correct? Yes. So you made this payment. Next entry is lease expense debit. Lease expense, income statement, whenever you take it to the income statement, you apply SLM. So lease expense will be debited by a constant amount. So you're debiting it by 25,000, right? Credit to lease liability by the amount of interest. Now, interest is 10% of the opening balance. Opening balance is 47,520. Opening balance of what? Asset or liability? Opening balance of the lease liability account. You're deciding about the amount to be credited to lease liability. So as a result, you will see the opening balance of lease liability. So 47,520 into 10%, that comes to 4,752. Right? So from 25,000, the amount charged to income statement, if 4,752 is interest, the balance is like the principal portion that belongs to the asset. So 25,000 lease expense debit, to lease liability 4,752, to lease asset balancing figure, whatever is the balance, 20,248. Okay, 25,000 will go to your income statement. 4,752 will come here. Okay, and 20,248. This is the amount that will be credited to asset. As a result, what is the balance now? And what is the balance here? The balance won't be same in both the accounts now. So asset account carries a balance of 22,272. A liability account carries a balance of 27,272. Right? So third year, when you make a payment of 30,000, third year, So again, lease liability account debit to cash by 30,000. Okay. And in the third year, lease expense will be again constant amount debited by 25,000. Credit lease liability by the amount of interest. Interest will be 10% of the opening balance. Opening balance is 27,272. 10% of that comes to 2728. So lease expense debited by 25,000. 2728 credited to interest or lease liability rather. So the balancing figure will be credited to your asset. So this is how you are amortizing the asset. So 22,272 was the opening balance of asset. 27,272 was the balance of liability. So 2727 was the amount of interest. You made a payment of 30,000 this year. So this year you credit your asset by 22,272. So this gets closed. And just look at the lease liability, even that gets closed. They credited it by 2728 to close it. Otherwise, there will be a difference of $1. So both the assets and liabilities that you created get closed in 3 years. Okay. Okay. Now coming to the books of lessor. We just discussed the books of lessee. Now coming to the books of lessor. Okay. So what will happen here? Now, again, we'll come to the example directly. See here. So both the cases that we just looked, we are looking at both examples in the books of lessor. Same examples we are taking here. So the first example that we looked, where a constant same amount was paid every year. So look at the question there. On one so and so lease lessee company leases from lessor company equipment for 3 years at 25,000 payable at the end of each year. The asset life is 10 years. The rate implicit in the lease is 10%. The lease is an operating lease. Record journal entry in lessor's book. Okay. Now lessor is the one who is receiving it. Correct. And what is he receiving? If it is an operating lease, he will directly treat that as a lease income. It's like a rent that he is collecting. Whenever it's an operating lease, he will treat it exactly like a rental agreement. He is getting some rent. What rent? Lease rent. As simple as that. Okay. So every year, what he will do is he will debit cash. He will credit lease income. Just observe there. Cash account debit to lease income, 25,000. Cash account debit to lease income, 25,000. Cash account debit to lease income, 25,000. Right? Simple. Okay. But if the amounts are different, the point is that whenever you take it to the income statement, you need to apply, what should I say, SLM. Okay. So a constant amount should be recognized in your income statement. That's what is written here. Okay. Straight line. So as a result, in the second question, let's read it again. What happened? Lessee company leases from lessor company equipment for 3 years at 20,000 payable at the end of year 1, 25,000 at the end of year 2, 30,000 at the end of year 3. Different amounts paid in different years. Okay. So now what we need to do? So I just told you, like in the previous case, 20 plus 30 plus 25. So the total is 75. We need to divide that equally. 75 divided by 3. That's 25. So in your income statement, you recognize a constant equal amount. That is 25,000. So how to do it? In that case, cash account will be debited by 20,000. Lease income, we have to recognize an income of 25,000. So what about that difference? That difference is we received less now. Income, we are recognizing income of 25,000, but we received just 20,000. So remaining 5,000, we will show it as receivable. So rent receivable or lease rent receivable account will be debited by 5,000. Okay. Now second year, we received 25,000 only. So cash account will be debited and lease income will be credited by 25,000. Third year, we received 30,000. So cash account will be debited, lease income will be credited by 25,000, and the 5,000 receivable that we had shown in year 1 will now be closed by crediting rent receivable by 5,000. Okay. Yes. Now we are coming ahead to short-term operating lease. Okay. We just read in theory that in case of short-term operating lease, we may not create a lease liability in the books of lessee. The lessee need not create any lease liability. Okay. So we are looking at that now. Just observe. In case of a short-term lease means whenever the lease term is less than 12 months. Okay. Then in that case, there's no issue. We can directly recognize that as an expense or an income in the books of lessor. So in the books of lessee, it will be like any other nominal account, simple lease expense account debit to cash. Okay. And that lease expense will go to income statement as an expense. And for lessor, it will be cash account debit to lease income. And that lease income will go to your income in your income statement. Okay. That will be for short-term lease. As simple. So a quick recap. If you see here, then in income statement, you have to recognize the lease expense on straight line basis. Remember that. Okay. So as far as lessee's financial statements are concerned, okay, then in case of an operating lease, lease expense will always be recognized in straight line basis. Okay. In your liabilities, you will recognize a lease liability. We just understood how to prepare that account, and right of use asset account. What about the lessor? Lessor will be actually recording the asset because he has not transferred ownership of it. So that will appear in his balance sheet as an asset. Okay. If you look at this, the asset has been cancelled by creation of a liability, but that is not happening in the balance sheet of lessor. So lessor will recognize that as an asset. Okay. And since he is recognizing this as an asset, he will claim depreciation on it. So the depreciation expense on it comes to the income statement. And yes, whatever is the lease income received from the lease lessee, he will credit that in his income statement, but that also on straight line basis. So after that, we have the finance lease. We just discussed about it. I hope all of you remember. Okay, these points. I hope all of you remember this. Okay. Now, one thing that we need to understand here. Okay. In case of finance lease, you can consider as if the lessee is the owner. Okay. Now, the point is that whenever we look at, suppose you're buying any house or any four-wheeler, any two-wheeler, anything like that on installments. Okay. So legally speaking, you get the ownership of that asset when you pay all the installments. Legal ownership is transferred when you pay all the installments. Okay. But for accounting purposes, what we will do is we will apply substance over form. You must have heard about this earlier. Substance over form. Maybe if you're from commerce background, you must have studied about this in 11th standard, maybe. Substance over form. So substance over form means in accounting, substance is preferred over form, where substance means what is happening practically, what is happening in real, actually what is happening. And form means formalities, legal formalities. So what is actually happening is preferred over legal formalities while doing accounting. So even if legally the title of the asset gets transferred only when you pay the final installment, but since you are using that asset from day one, we will treat from day one only that you are the owner of the asset. Getting me? So in case of finance lease, we will apply substance over form. That is, lessee will be here treated as the owner of the asset. Okay. So these are the journal entries. You can just look at it because we will be actually doing the same thing, but again, by just reading it, I don't think you will be understanding anything. Okay, so let's quickly go to the example with the help of which you will understand. But I want all of you to focus on one point. Okay. This is the point that I want you to focus at. Okay. So basically, just look at it. If O or W criteria is met, then we will be amortizing the right to use asset. Okay. So when you amortize, it will be amortized over the useful life of the asset. It will be amortized over the useful life of the asset. Okay. But if it is NE or R, then it will be amortized over lesser of useful life or lease term. Okay. Remember this, we will apply this in the example with the help of which you will understand that better. Now, what do you mean by this O or W and NE or R? O or W? O, W. NE or R? These three are NE and R. Okay. I'll give you some time. Just look at it. Okay. I hope you have gone through it. Okay. Because we will be using it in some time. So at that time, this is something that you need to remember. Okay. Yes. So let's look at an example with the help of which you will understand that better. Okay. Now we are looking at finance lease. Okay. So let's look at it. On 1/1 so and so lessee company leases from lesser company equipment for 5 years. Lease term is 5 years. Okay. At 25,000 payable at the end of each year. Okay. So that's a constant amount that we are paying. The asset life is 10 years. Life is 10 years. Okay. Okay. And lesser's carrying value is 120,000. That's in the books of lesser. Okay. Carrying value of the asset. Okay. So at the end of the lessee, carrying value means WDV. Okay. So at the end of the lease, estimated residual value of the asset is 60,000. So that's the estimated residual value. However, lessee has an option of purchasing the asset for $45,000. Bargain purchase, right? So as a result, this point tells us that this is a finance lease. Okay. And that lessee is reasonably certain to exercise. That's also given. He is reasonably certain to exercise it. Okay. So lessor incurs no initial direct cost in connection with the lease. The rate of implicit in the lease is 10% in lessee's books. So one by one, record the journal entry and okay. At the end, you will find the present value of ordinary annuity. Okay, annuity factor is given for 5 years at rate 10%. We can just cross check it with the help of just take your calculator. Okay, erase the old memory if there is any. Press MRC button 2 times. Then you will erase the old memory. Okay. Then 1 divided by 1.1. After that, press equal to M plus 5 times. Equal to M plus, equal to M plus, equal to M plus, equal to M plus, equal to M plus 5 times. Press memory recall, MRC. I hope all of you are getting the annuity factor. Do it as I say. 1 divided by 1.1 equal to M plus, equal to M plus, equal to M plus, equal to M plus, equal to M plus. Now MRC. Okay. Look at the question. This is what is given here. Okay. So if suppose it's not given in the question, which rarely will happen, mostly they give us, but if they don't provide, then we can get it. Similarly, they gave the present value factor after 5 years, that is 0.62092. We can even calculate that. Okay, here we don't need a memory. Okay, just do it. 1 divided by 1.1, just press equal to 5 times. 1, 2, 3, 4, 5. See what you get. 1 divided by 1.1 equal to 5 times. You're getting 0.62092? Yes. Okay. Now the point is that if you look at it, then the lessee is making 25,000 annual payments for 5 years. And at the end of 5 year, at the end of the 5th year, he will purchase that asset by paying 45,000. Okay. So look at the outflows, 25,000 every year for 5 years, and 45,000, not now, not in the 1st year, not in the 2nd year, not in the 3rd year, at the end of the 5th year. Okay. So we will calculate the present value of all these. So what is the total? So see here, since 25,000 is constant, common. Okay. Hence, we will simply multiply that with the annuity factor. 25,000 into 3.7909, whatever it is, 3.790079. And 45,000, that's a one-time payment. That's a one-time payment. And that will be at the end of the 5th year. So as a result, that 45,000 is multiplied with the factor, the discount factor of the 5th year. Okay. This is how we will get the present value of the lease payment. Now, this calculation is the most important calculation. Rest everything can be done. So I hope all of you understood this. Good then. So in that case, we will debit asset, again the same thing, debit asset, credit liability by this amount, 122,711. Okay. Now we have this amount here, 122,711. Okay. Now, how the general interest will be passed in case of finance lease? Okay. So we are in the books of lessee. Please remember that. We are in the books of lessee. So for the lessee, he has to bear interest. That's his expense. So he will debit interest expense account and he will credit lease liability. Okay. So what is doing? He's crediting lease liability. He's first creating the interest expense and he's transferring that to lease liability. Right. So how is he doing that? Just observe. We will calculate 10% of the opening balance, 122,711. Just calculate 10% of it. That's 12,271, right? So by 12,271, interest account debit to lease liability. Okay. We did that. Now lease liability account will be debited and cash account will be credited by full 25,000. Getting me? So first, debit interest, credit that to lease liability, and then whatever is the installment that you're paying, debit lease liability by that amount and pay cash. Okay. So what about the asset? So we will amortize the asset. So for how much duration should we amortize it? So that depends on whether it comes in OW or whether it comes in NER. If it comes in OW, we will amortize it in the life of the asset. And if it comes in NER, we will amortize it in the life of the asset or the lease term, whichever is less. So in this case, in this example, it comes under W. It comes under W. Okay. So as a result, we will be amortizing it in 10 years. So the total amount that you have debited to asset, 122,711, we will amortize it in 10 years. So this means 12711 divided in 10 years equally. So every year you will amortize the asset by an amount of 12,271. So the journal entry for that will be amortization account debit to accumulated amortization account. Just see it carefully. It's exactly like depreciation. Exactly like depreciation. In depreciation also used to pass the same thing. Depreciation account debit to accumulated depreciation account. The only thing is we are not recognizing it as depreciation. It's amortization. Okay. So amortization account debit to accumulated amortization account. Getting this? This is a constant journal entry that you will pass every year. Okay, for the coming 10 years. Now, let's look at our other journal entries now. Now, 12,271 is the interest for the very first year. Okay, then out of 25,000, if 12,271 is the interest, then what is the principal portion left? So 25,000 minus 12,271, principal portion left is 12,729. Correct? Now deduct this 12,729 from 122,711. The balance is 109,982. Okay. So second year's interest will be calculated on this amount. This is the opening balance of the second year. So 109,982 multiplied by 10%. That will be the interest for the second year. 109,998. Okay. So from 25,000, if I deduct this interest element, this is the principal element, 14,002. Deduct this 14,002 from 109,882 or 982 rather, sorry. So the balance is 95,980. Okay. Third year's interest will be calculated on this 95,980. So 10% of 95,980 comes to 95,998. Okay. So total amount 25,000, which includes interest of 95,998. So the principal portion left is 15,402. Deduct 15,402 from 95,980. The balance is 80,578. Now 80,578 into 10%, 8058, and so on. You getting me? So every year, whatever is the interest, you debit to interest, you credit to lease liability. Okay. And then the lease liability account is debited and cash account is credited. Every year you keep on doing the same. Third year's interest expense is debited and lease liability is credited. Again, lease liability is debited and cash is credited. This will go on. And this journal entry will also remain constant. Amortization account debit to accumulated amortization account. Okay. So just observe here that we are amortizing asset in 10 years. But what about the interest? Interest is recognized only in 5 years. So the total lease payment is 25,000 into 5, 170,000. 25,000 into 5, 175. 25,000 into 5 is 125,000 plus 45,000 when you are buying it. So the total amount that you are paying is 170,000, which includes interest of 47,289. How do you get 47,289? The total of all these. Right? 47,289. That's the interest. Balance is the asset amortization, which is to be amortized in 10 years. We are looking at another example now. Same figures, same things exactly. But now we will just change that. Instead of W, this time it's E. Okay. So if it's O or W, we amortize within the life of the asset. But if it is between NE and R, then any of NE and R, then in that case, what we do is we amortize within the life of the asset or the lease term, whichever is lower. So if you look at the life of the asset, that was 10 years and lease term is 5 years. So lease term is lower. So if it is between NE and R, we will amortize in lease term. So look at the question now. Lessee company leases from lessor company equipment for 5 years at rate 25,000 payable at the end of each year. The asset life is 10 years. Fair value of the asset is 132,025. Okay. While lessor's carrying value is 120,000. Okay. At the end of the lease, estimated residual value of the asset is 60,000. However, lessee provides a residual value guarantee of 50,000. Okay. Lessor incurs no initial direct cost in connection with the lease. The rate implicit in the lease is 10%. The lessee's books, so and so we have to pass the journal entry. The annuity factor and the present value factors are given to us. So if you look at here, look at the example carefully, then if we calculate the values, so when you calculate to test the whether it's a finance lease or operating lease, to test that, we need to consider everything. Okay. So when you consider everything, if you look at it, then 25,000 is multiplied by the annuity amount. And the residual value, okay, that the lessee has guaranteed is $50,000. Okay. So suppose even if he has to meet, he has to pay 50,000 at year 5 end. So that is multiplied by the discount factor of year 5. So if you calculate that, it comes to 125,816. Right? Now, if you calculate 125,816 is 95% of the fair value that has been given to us, 132025. And that was one of the criteria. Okay. So that comes in E of owner. So as a result, with the help of this, we decide that this is a finance lease. Okay. But now when you actually pass the journal entry, we come to know this, that's one thing, that the estimated residual value was $60,000, while the lessee has guaranteed $50,000. Now, guarantee applies only when you don't get enough, right? So suppose if the lessor was getting anything less, then lessee had to come ahead and he had to pay $50,000. That's a minimum guarantee, correct? But here, if the estimated residual value is $60,000, then quite obviously the lessee won't be having any liability. Getting me? So as a result, when you do the accounting, you will take only those 25,000 annual payments into consideration. So 25,000 into 3.7909079 is 94,770. So lease asset will be debited by 94,770. Lease liability will be credited by 94,770. Now the same thing will be done now. 94,770, 10% of that is 94,777. So interest account debit to lease liability, 9477. Okay. Then we make the payment, lease liability account debit to cash, 25,000. So from this 25,000, 9477 is interest. So balance is the principal portion, which is 15,523. When you deduct 15,523 from 94,770, you get 79,247. Okay. 10% of that is 7,925. So second year, interest expense debit to lease liability, 7,925. Again, you make the payment of 25,000. So lease liability debit to cash, 25,000. So this 25,000 includes 7,925 of interest. So the principal amount is 17,075. Deduct 17,075 from 79,247, you get 62,172. 10% of that is the interest of the third year, 6217, and so on. Correct? What about the lease asset? We need to amortize it. But this time, since it's E, we will amortize it between 10 or 5 years, whichever is lower. Life or lease term, whichever is lower. Lease term is lower here, 5 years. So now that's the only difference, that this 94,770, which was debited to asset, this will be amortized in 5 years. So that will be 18,954 every year. Same journal entry, only the amount changes. Amortization account debit to accumulated amortization account. So you see, the only change was that asset amortization was for 5 years. In the previous case, it was for 10 years. So you need to carefully look at it, that what is the reason? Is it OW or is it NER? Now, as far as the lessor is concerned, sorry. Okay. So, as far as the lessor is concerned, okay. So we already discussed about the operating lease. Okay. Now, what will happen in finance lease? He won't recognize it in his asset, nil. Okay. Only the interest income will be credited. That will be recognized. And whatever is the selling loss, he will be recognizing that. Selling profit, if any, selling loss, if any, that is the only thing that he will recognize, right?